Welcome to Gem Store Productions. My name is Delilah Powell, and today I will be going over some financial statements for the company. These statements consist of the balance sheet, profit and loss, the company's budget versus the actual statement, and the statement of cash flows report. The purpose of the balance sheet is that it provides a financial statement that summarizes a company's assets, liabilities, and equity at a specific point in time. It's used to assess a company's financial health and make decisions about investments, resource allocation, and more. The accounts found on the balance sheet are as follows: assets, liabilities, equity, and debt ratio. As you can see here, vehicles has an account balance of 13,953, which is the result of purchasing a vehicle for 14,250 and is now depreciating at the rate of $297 per month. Supplies inventory has a balance of 1,333 after expensing 667 in purchasing office supplies expense. Loans payable has an account balance of 40,000, while interest payable has a balance of 233 due to interest accrued over time. Common stock has a balance of 20,000, while retained earnings has accumulated a profit of $4,833. The three ratios or debt to assets, return on assets, and return on equity. Debt to asset ratio is calculated by dividing a company's total liabilities by its total assets. It shows what percentage of the company's assets are financed by debt. Debt to assets purpose is to divide total liability by total asset. The purpose of return on equity is to measure how efficiently a company uses its shareholders' money to generate profits. Also known as ROE, is a financial ratio that measures how efficiently a company uses its total assets to generate profit. Here's a copy of the profit and loss statement. This statement serves to summarize a company's revenue and expenses over a specific period, ultimately showing whether the business made a profit or loss. We had a favorable variance in event revenue due to an event that ended early. We had favorable variances for utilities, depreciation, interest in equipment, rental, due to not going over our budget and staying on top of our numbers. Payroll expense was unfavorable due to employees working over. Office supplies had an unfavorable variance due to going over our budget in office supplies, as well as insurance expense due to needing extra policies. A statement of cash flows is a financial statement that shows how much cash a business has generated and spent over a period of time. It is used to access a company's liquidity and financial health, operating activities, showing how much a cash business generates from its daily operation. Investing activity is a company's cash flow statement that details the cash inflows and outflows related to the purchase and sale of a long-term asset. Financing activity shows a cash flow statement that details how a business raises capital through issuing stock or debt and how it pays back investors. The company borrowed $20,000 for supplies inventory in transaction number 2 in assignment 2. That transaction credited cash for $20,000 and debited $20,000 in supplies inventory. The company borrowed $40,000 in transaction number 1 in assignment number 2. That transaction debited cash for $40,000 and credited loan payable for $40,000. Since neither account is on profit and loss statement, We're adding the cash to the statement. The company borrowed $14,000 in transaction number 5, assignment 2 for vehicles. That transaction debited cash for $14,000 and credited vehicles for $14,000. 5 internal controls. 1. Access controls. 2. Physical audit. 3. Trial balances. 4. Audit trial. 5. Control environment. Slide 7. What I have learned. Accounting. Types of budgets along with the advantages and disadvantages. Elements of the fraud triangle. Ratio, vertical, horizontal analysis. Profits and loss. Cash flows. Balance sheets. Financial statements. Deposits, payables, and revenue. These are my references that I've used throughout this assignment.